Trump is killing gold right now, which means that you need a plan if you hold gold, silver, other metals, or even if you just have a retirement portfolio that you care about. Because right now, gold is down 27% from its highs, and it's down 5% this year alone. It's now had its fourth losing week in a row, which is a good thing, by the way. I'll explain why in a bit. And as usual, the media is saying that gold is dead again, blah, blah, blah. We've heard it all before. But the crazy thing is, the guy doing this, the guy behind the most recent crash is Trump. But I'm not selling a single ounce, by the way. If anything, I'm going to be buying more gold. And today I'm going to talk about why and where I'm going to buy, but that's in a bit. First, let's talk about how he's even doing this and why he's doing this. If you don't know me, my name's Nick. I've been a professional investor and unprofessional trader for 25 years. None of this is financial advice, and this is not an inducement to buy or sell any assets. As always, do not take financial advice from some random dude on YouTube. Right, so before we get to how Trump is doing this and why he's doing it, we need to talk about the gold price paradox. When you see a gold chart climbing, your brain tells you that gold is getting more valuable, but it isn't. Gold is just a shiny rock. It doesn't grow, it doesn't earn, it doesn't change. An ounce today is the same as an ounce 100 years ago or 1,000 years ago. So if gold isn't changing, what's actually moving the gold chart? It's the useless bit that it's paired against, the scam paper known as the US dollar. No offense to the US, by the way, all fiat currencies are scam, be it the euro or the pound or the Aussie dollar, whatever. So a rising gold price is really just the dollar losing value against gold. So gold is really just an indicator for how healthy the US dollar is. When people stop trusting the dollar, gold pumps. When confidence comes back to the dollar, gold drops. Over time, gold has always gone up, which is a testament to the value of to the lack of value of the dollar. So especially the last 2 years, by the way, when it's been screaming to 5,600 an ounce. So when gold falls the way it's falling right now, you don't ask what's wrong with gold. You just ask who's handed the dollar all of its trust back. And why now? Well, that's where this story gets interesting. So gold is falling because Trump needs it to fall right now. And he's built the perfect machine to do it. Think about what's actually happening in America right now. Jobs are booming all of a sudden. The last job report came in at 172,000 new jobs when everyone expected 85,000, more than double what they thought. AI money is flooding into the country like it's 1999 all over again. Now remember 1999 because it's very important. Burn it into your memory. We're going to talk about it in a sec. But for now, 2026, the dollar has hit a 1-year high, right? And Trump is out there every single day selling the golden age of America. America is back. America is winning because best economy in history, all that kind of stuff. You've heard it hundreds of times. Now go back to what gold actually measures. It falls when trust in the dollar rises, and a booming, winning money magnet in America is a machine for manufacturing exactly that trust. So the first weapon against the dollar that's being deployed is the story. And the second weapon is, it's a bit duller, but it's what does the real damage, and that's interest rates. Gold has one flaw as an asset, one flaw. It doesn't pay you anything. No dividend, no interest, no rent. You stick your money in a government bond and it pays you to just sit there and wait. It pays you interest. Gold just sits there being safe though. So gold is always competing with cash, and whether it wins comes down to a single number. The interest rate minus inflation, which is called the real rate. Picture inflation as an escalator, right? And the interest is you walking up the escalator. So if the escalator drops faster than you can climb, you're going backwards even while you're moving. Your cash buys less every single year. That's a negative real rate. And that's the world that gold lives for. It's the world that gold thrives in. But push the rate above inflation and suddenly you're climbing faster than the escalator is falling. Your cash is actually getting you somewhere. It's safe, it's boring, but it's getting you somewhere, right? And next to that, a lump of gold that pays you nothing starts to look pretty boring. And I mean, it's not boring. Some people just lack the ability to think or the patience, so to them it looks boring. But the thing is, that's the world that Trump's Fed is building right now on purpose. Hold rates high, talk hard on inflation, drag the real return on cash back above zero. That's when. That's why I say that Trump is killing gold and Kevin Warsh is helping him. But this can't last. Remember 1999. We'll get to it in a sec. But let's stick to the present for right now. So the market right now is betting on 3 rate hikes this year. 6 months ago they were promising rate cuts. Now they're saying 3 rate hikes this year. And there's one more thing, by the way, leaning on gold that I haven't talked about, and that's the dollar itself. So gold is priced in dollars. We've talked about that. So when the dollar gets stronger, gold automatically gets more expensive for everyone outside of America. So some guy in Europe or Japan or India or wherever suddenly needs more of his own money to buy the same ounce of gold. So global demand cools right as the dollar goes up. And of course, this means that silver goes down along with other metals too. But not everyone gets hurt. Smart investors like you or I, we do fine. Dumb investors, they get hurt. And I'm going to explain why in a sec. But let's summarize so far, right? So the machine being built is high rates, a roaring dollar, and a feel-good story about the golden age of America. And those three forces all leaning on gold at once means that gold goes down. Now, ignore the headlines for a second because they're selling your fairy tale. I mean, they always are. Anyway, you don't need me to tell you that. The story that they are running is that Trump wants rate cuts and his new Fed chairman, Kevin Warsh, is bravely defying him, standing up to the president, holding the line on inflation like some lone hero. And look, honestly, it did fool me for a second, but come on. Do we actually believe that? Do we believe that this whole thing isn't orchestrated? You don't hand a man the most powerful seat in finance so that he can sit there and ignore you. That's not how the government tends to operate. I always quote Charlie Munger in these things. Show me the incentive and I'll show you the outcome. Think about what Trump actually needs right now. The midterms are coming. He needs inflation dead. He needs the dollar strong. He needs the stock market holding up so people feel rich even if they're not. He needs to be the man who fixed it all. A high rate, a strong dollar, a good story. The Fed hands him all three of these things. So Trump gets up in public and plays the victim, demands cuts, bangs the table about it. That way, if cuts ever come, he gets to take credit for it. And if the economy hurts on the way there, well, that's what the mean old Fed did to him. It was nothing to do with Trump. Behind the curtain, Warsh is doing exactly what Trump needs him to do. It's a good cop, bad cop, and where the mug's being worked on, right? So the thing is, watch what they actually do, forget about what they tweet. That's what you always have to remember about politicians. Watch what they're doing, not what they're saying. And if you think a policy machine can't crush gold for years, let me take you back a little bit because we need to figure out how long is this downtrend in gold going to last. I don't think it will last years, but it can. So let's talk about how. Because we've seen this exact same story play out before, and it's a story not many people often tell. But I will because I'm a finance nerd and I love this shit. So back in 2011, gold was on fire. It ripped all the way to $1,920 an ounce. Every headline was saying that it was going to $5,000 an ounce. Your barber was buying gold. Your mate who's never owned gold in his life suddenly became a gold bug. I know because I wanted to become a gold bug in 2011, but I got talked out of it and I didn't end up buying until a few years later. But then what happens? The Fed starts talking, not even doing anything. They just started talking. They started hinting that all the money printing from the 2008 crisis was going to slow down. They were calling it tapering. That was all it took. Just a hint of that. It was that easy. It was a hint that money printing was ending, the dollar was going to firm up, and gold rolled over. And it didn't just dip, it bled out for 4 straight years. From about 1,920 in 2011 down to 1,050 by the end of 2015. It was a 45% collapse. If you bought the top, you lost nearly half of your money, just like, if you bought the top in 2025. I mean, if you were dumb enough to sell, you lost half your money, obviously. If you actually bought a lot of gold and silver around there, like I did, then you would have been fine. But you see where I'm getting at, right? When these crashes happen, is often a really good time to buy because gold goes up for a bit and then it goes down. And when it goes down is generally the best time to buy, not when it goes all the way up. Now, here's the moment where the dumb investors get absolutely wrecked and the smart ones win. So let me show you how. Picture a guy running a leveraged gold trade. He borrowed money to buy gold that he couldn't afford because on the way up, that's what people think you need to do to make money. But then gold starts ticking down. It tops out, it starts ticking down. His broker calls him and says, put more cash in this position or we're gonna margin call you. Gold ticks down again, he gets another call. Eventually, he can't meet it, so the broker margin calls him. It dumps his whole position at the worst possible price. And that forced selling pushes gold down even further when it's multiplied thousands and thousands of times over, which triggers the next leverage guy's margin call, and his selling triggers the next one. Now imagine this across hundreds of, millions of orders, millions of people. It causes price to crash. So that's how the dumb money gets absolutely crushed on gold. It's just a chain of tourists getting liquidated one after the other, all the way down. But the bloke who owns his metal outright, no leverage, no broker, no margin call, just sits there and watches it happen to other people. So who gets destroyed in those 4 years? Not the holders like you and I, the tourists, the people who bought at 1,800, back then, because their cousin told them to, the leverage traders who got margin called and wiped out on the way down. Now put this in the frame of today. Gold ran to nearly 5,600 an ounce. The Fed is firming up. The dollar is at 1-year highs. The tourists are panicking. They're getting margin called and all that kind of stuff. We're standing in the same exact spot we were in 2012. So forget why gold is falling. The thing to actually look at is what comes next. So now let's finally talk about 1999. I said I was going to talk about it. So for those of you old enough or nerdy enough to study the history of finance, you'll know that 1999 was an amazing year. The Dotcom bubble was really heating up. Markets were absolutely flying. Microsoft pumped so hard that they legally had to rebrand to Giga Hard because they were no longer micro or soft. That's such a bad joke. I'm very sorry. This was essentially the blow off top of the dot-com bubble. The era we're in right now, in my opinion, is the blow off top with the AI bubble. And I want you to look at this Microsoft chart. I talk about this quite a bit in my videos. January of the year 2000, Microsoft topped and then it crashed. And it didn't recapture its all-time high until January of 2017. That's 17 years. Or I think it was October of 17 years, close enough. Now I talk about this all the time because people don't appreciate how bad the dot-com bubble was and how long it took companies to recover. And they don't appreciate that this could happen again today to like SpaceX and Nvidia and all the other AI darlings. We're not magically immune to another major correction that lasts a decade or two. I mean, look, I've talked about Cisco before. It was one of the world's biggest companies in 1999. Then it crashed and it didn't recover its market, no, sorry, not its market cap. It's never recovered its market cap. It didn't recover its stock price that it had in 1999 until just a few months ago, 26 years. But what did gold do in that time frame? Well, this was gold in 1999. The editor will put it up on the screen. And this was gold a few years later, like 5 or 6 or 7 years later. I believe that we are in another dot-com bubble, just like every historical bubble, be it trains, planes, tulips, Japan in the early 90s, housing and credit in 2008. It's all just a cycle that repeats itself over and over and over and over. And dumb people make the same mistake every time. They pile into the hot fancy thing, ignore gold, and then they live to regret it. And don't just take my word for it, by the way. Watch what the big players are doing with their own money, because this tells you everything you need to know. Central banks have been buyers of gold for 16 years straight. They are the people who actually print money, and they are swapping their money for metal as fast as they can. France pulled 129 tons of gold out of the New York Fed and shipped it back home. India cut the shares of its gold held abroad from 55% down to 22% last year, so they repatriated gold too. And the world's central banks, they're all repatriating gold. It's crazy. Everyone is desperate to get their gold back. So the very entities who create fiat currencies are giving up fiat currency for gold. That literally tells you everything you need to know. If anyone should be relaxed about the dollar, it's them, but they're not. Instead, they are selling it for gold, then flying that gold back home to their vaults. And it's not just them, by the way. Banks like JP Morgan, Morgan Stanley, Goldman Sachs, they're buying up tons of gold too. JP holds more gold now than they have in their entire history. Jane Street, a massive dodgy hedge fund, is one of the biggest holders of silver all of a sudden, just out of nowhere. They just started buying up tons of silver. I keep saying it over and over and over. The media keeps telling us it's over, that the gold run is over, yet all the central banks, hedge funds, they just keep buying tons and tons of metal for some reason. One of them is lying to you. So, let me be straight with you though, because I'd be doing you a disservice if I'm only telling you the good bits. All these entities like central banks, like hedge funds, they have the ability to wait years and years in a position, and a lot of people like retail don't. And this could last years. That 2011 bear market, it lasted for 4 years. If the job market stays strong or keeps getting stronger, if AI mania keeps running, gold could be dead money for a good while yet. It could be dead money for years. I'm not promising you that gold is going to pump tomorrow or next week or even next year. And I mean, look, I think the AI bubble is going to pop at some point, but you never know. It could keep running for another 2, 3, or 4 years. The market can stay irrational longer than you can remain liquid. Remember that. Which is why I only buy physical gold that I plan to hold for a long, long time. And I don't buy leveraged ETFs or any of that bullshit. I put myself in a position where I can afford to wait. If the AI bubble doesn't pop this year, no problem. It'll pop eventually because these bubbles always pop. Which brings me to the main point. What am I actually doing with my own money? Well, it's the same thing I always do. It's nothing dramatic. I'm not selling a single ounce of gold. If it dips, I'm gonna buy more. We're at 4,000 now, and people said that we were never gonna get to 4,000 again. Honestly, I think 3,000 is on the cards right now if this gets much worse. It's clear that Trump and Warsh are wanting to strengthen the dollar, for now, by the way. I still think that long-term Trump wants to devalue the dollar. That's his plan. It's his stated goal, really. But for now, leading up until the midterms, I think that Trump and Warsh want to strengthen the dollar, and a strong dollar means a lower gold price, and that's great. I mean, I've been saying for a while that I'm cashed up right now, and that means that I can buy gold when it dips, or I can buy silver, or I can buy copper, or I can buy uranium, and I can buy my small basket of defensive stocks that I'm buying. So that's my plan. What's your plan?